Question 1. A life insurance policy owner in Georgia allows their policy to lapse after 7 years due to non-payment of premiums. The policy has accumulated cash value. What is the automatic non-forfeiture option that the insurer will implement if the policy owner does not choose an option? A. Extended term. B. Reduced paid-up insurance. C. Cash surrender value. D. Automatic premium loan. Answer: A. Extended term. In Georgia, if a life insurance policy with cash value lapses and the policy owner has not selected a non-forfeiture option, the insurer is required to automatically implement the extended term option. This option uses the policy's cash value as a single premium to purchase a new term life policy for the same face amount as the original policy, for as long a period as the cash value can buy. It's designed to provide continued coverage for the original face amount, which is often a policyholder's priority. This is the default protection for your coverage if you stop paying premiums and don't choose another option. Question 2. An applicant for a life insurance policy in Georgia intentionally omits information about a serious medical condition on the application. The policy is issued, and 2.5 years later, the insured dies from complications related to that undisclosed condition. How will the insurer likely handle this claim, assuming no fraud was involved in the legal sense? A. Deny the claim due to misrepresentation. B. Pay the full death benefit as the incontestability period has passed. C. Pay a reduced death benefit based on the premium that would have been charged. D. Rescind the policy and refund all premiums paid. Answer: B. Pay the full death benefit as the incontestability period has passed. In Georgia, life insurance policies typically have a 2-year incontestability period, meaning that after the policy has been in force for 2 years, the insurer generally cannot contest the validity of the policy, even if there were material misrepresentations on the application, unless it can prove fraudulent intent. Since 2.5 years have passed, the incontestability period has expired, and the insurer must pay the full death benefit. This provision protects policyholders from having claims denied years after a policy is issued for innocent or unintentional errors on the application. Question 3. Under Georgia law, a licensed insurance producer who collects premiums from an insured for an insurer is considered to be acting as a representative of which party? A. The insured. B. The Commissioner of Insurance. C. The insurer. D. Both the insured and the insurer. Answer: C. The insurer. In Georgia, when a producer collects premiums from an insured, they are acting on behalf of the insurer, not the insured. This means that if a producer collects premiums, the insurer is legally considered to have received the payment, even if the producer has not yet remitted it to the company. This concept of agency protects consumers, as the producer's actions within their scope of authority are binding on the insurer. Always remember that for premium collection, the producer represents the company, not the client. Question 4. Which of the following is a key characteristic of a variable life insurance policy in Georgia? A. The cash value grows at a guaranteed fixed interest rate. B. The policy owner bears the investment risk of the separate account. C. The death benefit is fixed and guaranteed for the life of the policy. D. It does not require a securities license to sell in Georgia. Answer: B. The policy owner bears the investment risk of the separate account. Variable life insurance policies are unique because their cash value is invested in a separate account, which contains various investment options like stocks and bonds, chosen by the policy owner. Because the performance of these investments dictates the growth of the cash value and can affect the death benefit, the policy owner assumes the investment risk. This means the cash value is not guaranteed and can fluctuate, potentially decreasing if the underlying investments perform poorly. Due to this investment risk, selling variable life insurance requires both a state life insurance license and a FINRA securities license. Question 5. A Georgia insured is replacing an existing individual life insurance policy. Which of the following actions is required of the replacing insurer's producer? A. Obtain a list of all existing life insurance policies from the applicant. B. Advise the applicant to immediately surrender the existing policy to avoid a lapse. C. Deliver the notice regarding replacement to the applicant and obtain a signed statement from the applicant. D. Provide the applicant with a comparison statement outlining the benefits of the new policy only. Answer: C. Deliver the notice regarding replacement to the applicant and obtain a signed statement from the applicant. When a life insurance policy is replaced in Georgia, the replacing insurer's producer has specific responsibilities designed to protect the consumer. One crucial step is to deliver a notice regarding replacement to the applicant at the time of application and have the applicant sign it. This notice informs the applicant of potential disadvantages of replacement, such as new contestability periods or surrender charges, and encourages careful consideration before making a change. This ensures the applicant is fully aware of the implications of replacing an existing policy. Question 6. A life insurance policy in Georgia has a free look period. What is the primary purpose of this provision? A. To allow the insurer to review the policy for accuracy after issuance. B. To give the policy owner a period to return the policy for a full refund of premiums. C. To allow the policy owner to change the beneficiary without penalty. D. To enable the insured to receive an immediate cash value surrender. Answer: B. To give the policy owner a period to return the policy for a full refund of premiums. The free look period, also known as a right to examine period, is a consumer protection feature that allows a new policy owner to review the policy after delivery. If the policy owner decides they don't want the policy for any reason within this specified timeframe, typically 10 to 30 days in Georgia, though check specific product requirements, they can return it to the insurer and receive a full refund of all premiums paid. This ensures consumers have time to understand what they've purchased and aren't locked into something they regret. Question 7. All of the following are examples of unfair trade practices in Georgia, except A. Twisting. B. Rebating. C. Controlled business. D. Misrepresentation. Answer: C. Controlled business. Twisting, rebating, and misrepresentation are all considered unfair trade practices in Georgia because they involve deceptive or unethical conduct that harms consumers or undermines market integrity. Twisting involves inducing a policyholder to surrender an existing policy for a new one to the detriment of the policyholder. Rebating is offering a prospective client something of value not specified in the policy as an inducement to purchase. Misrepresentation involves making false statements about a policy. Controlled business, which refers to insurance written on the lives or property of the producer's family or business associates, is generally acceptable within certain limits in Georgia, not an unfair trade practice itself, though excessive controlled business can be a regulatory concern. Question 8. In Georgia, what is the standard minimum grace period for an individual life insurance policy? A. 7 days. B. 10 days. C. 20 days. D. 30 days. Answer: D. 30 days. Georgia law mandates a minimum grace period of 30 days for individual life insurance policies. The grace period is a period after the premium due date during which a policy remains in force, even if the premium hasn't been paid. If the insured dies during this grace period, the death benefit will still be paid, minus any overdue premiums. This provision gives policyholders a safety net, preventing immediate policy lapse if a payment is slightly delayed. Question 9. A married couple in Georgia applies for a life insurance policy on the husband. The wife is named as the primary beneficiary, and their adult son is named as the contingent beneficiary. If the wife predeceases the husband, and the husband then dies, who will receive the death benefit? A. The wife's estate. B. The contingent beneficiary, their son. C. The husband's estate. D. The insurer, as there is no living primary beneficiary. Answer, B, the contingent beneficiary, their son. In this scenario, the contingent beneficiary, the son, will receive the death benefit. A contingent beneficiary is designated to receive the policy proceeds if the primary beneficiary dies before the insured. This designation prevents the proceeds from going to the insured's estate or the insurer, ensuring the policy owner's wishes for distribution are carried out even if the first-choice beneficiary is no longer living. Always name a contingent beneficiary to avoid unintended distributions or delays in claim payments. Question 10. Which life insurance rider in Georgia would pay a benefit if the insured becomes totally and permanently disabled and can no longer pay premiums? A. Waiver of premium rider. B. Accidental death benefit rider. C. Guaranteed insurability rider. D. Payer benefit rider. Answer, A. Waiver of premium rider. The waiver of premium rider is specifically designed to keep a life insurance policy in force if the insured becomes totally and permanently disabled and is unable to pay premiums. Under this rider, the insurer will waive or cover the premiums for the duration of the disability, ensuring the policy's benefits, including the death benefit and cash value accumulation, continue without interruption. This rider provides crucial financial protection against the double burden of disability and ongoing premium payments. Question 11. What is the primary characteristic that distinguishes group life insurance from individual life insurance in Georgia? A. Group life policies are generally more expensive per unit of coverage. B. Group life coverage is typically provided without evidence of insurability for most members. C. Group life policies build significant cash value, unlike individual policies. D. Group life policies are usually convertible to individual policies. Answer, B. Group life coverage is typically provided without evidence of insurability for most members. A key differentiator for group life insurance is that individual members of the group usually do not have to provide evidence of insurability, like a medical exam, to receive coverage, especially if they enrolled during the initial eligibility period. Instead, the underwriting is done on the group as a whole, based on its characteristics, such as age distribution and occupations. This makes group life accessible to individuals who might otherwise be uninsurable or find individual coverage too expensive. Question 12. Under Georgia law, if an insured dies by suicide within a certain period after the policy's effective date, the insurer's liability is typically limited to a refund of premiums paid. What is this period? A. 6 months. B. 1 year. C. 2 years. D. 3 years. Answer, C. 2 years. Most life insurance policies in Georgia, as in many states, include a suicide clause that limits the insurer's liability if the insured dies by suicide within 2 years of the policy's effective date. If suicide occurs within this period, the insurer is generally only obligated to refund the premiums paid, not the full death benefit. After 2 years, the suicide clause typically expires, and the full death benefit would be payable, preventing insurance from being taken out with suicidal intent. Question 13. Which of the following statements about policy loans on a life insurance policy in Georgia is true? A. Policy loans must be repaid before the death benefit can be paid. B. Interest is charged on policy loans, but they do not need to be repaid. C. Policy loans decrease the policy's cash value but do not affect the death benefit. D. Policy loans are subject to approval by the Commissioner of Insurance. Answer, B. Interest is charged on policy loans, but they do not need to be repaid. Policy loans are a unique feature of whole life and other cash value policies, allowing the policy owner to borrow against the accumulated cash value. While interest is charged on these loans, they are not legally required to be repaid, they are essentially an advance on the policy's cash value or death benefit. If a policy loan, plus any accrued interest, is outstanding at the time of the insured's death, the loan amount will be deducted from the death benefit before it is paid to the beneficiary. Question 14. An agent in Georgia is advising a client about a life insurance policy. The client asks about the cash value growth. The agent states that the cash value is guaranteed to grow at a specific rate and will never decrease, even though the policy is a variable universal life policy. This statement is an example of what unfair trade practice. A. Rebating. B. Twisting. C. Misrepresentation. D. Defamation. Answer: C. Misrepresentation. This scenario describes misrepresentation, which is an unfair trade practice involving making false or misleading statements about a policy's terms, benefits, or dividends. Variable universal life policies, by their nature, have investment risk, meaning their cash values are not guaranteed and can fluctuate or even decrease based on the performance of the underlying investments. Stating that the cash value growth is guaranteed and will never decrease for such a policy is a false statement designed to mislead the client. Question 15. A Georgia resident owns a whole life insurance policy. At age 65, they decide they no longer need life insurance coverage but want to access the accumulated value. Which non-forfeiture option would allow them to receive the policy's cash value in a lump sum? A. Extended term. B. Reduced paid-up insurance. C. Cash surrender value. D. Automatic premium loan. Answer: C. Cash surrender value. The cash surrender value non-forfeiture option allows a policy owner to surrender their life insurance policy and receive the accumulated cash value as a lump sum payment. By choosing this option, the policy terminates, and all future coverage and obligations cease. It's the most straightforward way to access the funds built up within a permanent life insurance policy if the need for coverage diminishes or a large sum of cash is desired. Question 16. In Georgia, what is the primary purpose of the National Association of Insurance Commissioners, NAIC? A. To regulate individual insurance companies and issue licenses. B. To assist state insurance departments in developing uniformity in insurance laws and regulations. C. To act as a lobbyist for insurance companies at the federal level. D. To handle consumer complaints against insurance companies nationwide. Answer: B. To assist state insurance departments in developing uniformity in insurance laws and regulations. The NAIC is an organization that provides a forum for the state insurance departments to coordinate regulatory oversight of the insurance industry. Its primary purpose is to develop model laws and regulations that states can then adopt, promoting uniformity and consistency across different jurisdictions, even though each state ultimately enacts and enforces its own laws. This collaborative effort helps ensure that insurance regulation is effective and consistent across the country without being a direct regulator itself. Question 17. Which of the following is a characteristic of a participating life insurance policy issued in Georgia? A. It pays dividends to policyholders if the company's financial performance exceeds expectations. B. It guarantees a higher interest rate on its cash value than non-participating policies. C. It is typically offered by stock insurance companies. D. It limits the policyholder's ability to take policy loans. Answer: A. It pays dividends to policyholders if the company's financial performance exceeds expectations. Participating life insurance policies are issued by mutual insurance companies and pay dividends to policyholders. These dividends are essentially a return of excess premium if the company's mortality, expense, and investment experience is more favorable than anticipated. Dividends are not guaranteed, but when paid, they represent the policyholder's share in the company's divisible surplus. This is why they are called participating policies. Policyholders participate in the company's profits. Question 18. Under Georgia insurance law, if a producer makes a false statement about the financial condition of another insurer to a client, they have engaged in which prohibited practice? A. Defamation. B. Rebating. C. Twisting. D. Coercion. Answer: A. Defamation. Defamation is the act of making false or malicious statements about another insurer, its financial condition, or its agents, that are calculated to injure the other insurer. When a producer spreads untrue information about a competitor to influence a client, they are engaging in defamation, which is an unfair trade practice. This practice is prohibited to maintain fair competition and prevent misleading consumers about an insurer's reliability. Question 19. A life insurance policy in Georgia includes an entire contract provision. What does this provision state? A. The policy, along with the application and any attached riders, constitutes the entire agreement. B. The policy owner can make changes to the contract at any time without insurer approval. C. The insurer can modify the policy terms unilaterally if market conditions change. D. Only the policy document itself, excluding the application, is the legal contract. Answer. A. The policy, along with the application and any attached riders, constitutes the entire agreement. The entire contract provision states that the life insurance policy itself, together with the application, which is attached to the policy, and any riders or amendments, represents the complete and sole agreement between the policy owner and the insurer. This provision is crucial because it prevents either party from referring to outside documents or oral statements to change or interpret the contract terms. It ensures that everything legally binding is contained within the policy document, protecting both parties. Question 20. In Georgia, when a life insurance policy's cash value equals its face amount, the policy is said to have reached what stage? A. Maturity. B. Lapse. C. Surrender. D. Reinstatement. Answer. A. Maturity. A whole life insurance policy is designed to mature at a specific age, typically age 100 or 120. When the insured reaches this age, the policy's cash value will equal its face amount. At this point, the insurer pays the policy owner the face amount of the policy as if a death benefit had occurred, and the contract ends. This maturity signifies that the policy has reached its full design value and lifetime benefit, rather than the insured's death. Question 21. A Georgia resident owns a universal life insurance policy. Which statement accurately describes how the premiums are handled in this type of policy? A. Premiums are fixed and guaranteed for the life of the policy. B. Premiums are flexible and can be adjusted by the policy owner. C. Premiums are paid into a separate account and are not guaranteed. D. Premiums increase annually based on the insured's attained age. Answer. B. Premiums are flexible and can be adjusted by the policy owner. Universal life insurance policies are known for their flexible premiums. Unlike whole life, where premiums are fixed, or term life, where they might increase at renewal, universal life policy owners can typically adjust the amount and timing of their premium payments, within certain limits, as long as there is enough cash value to cover policy expenses. This flexibility allows the policy owner to tailor payments to their changing financial circumstances, making it a highly adaptable form of permanent life insurance. Question 22. Which Georgia-specific regulation primarily focuses on ensuring that an insurance product being recommended to a consumer is appropriate for their needs and financial situation? A. The Unfair Claims Settlement Practices Act. B. The Replacement of Life Insurance and Annuities Regulation. C. Suitability Requirements for Annuities and Life Insurance. D. The Advertising and Marketing of Insurance Products Rule. Answer. C. Suitability Requirements for Annuities and Life Insurance. Suitability requirements are regulations designed to ensure that insurance producers recommend products that are appropriate for a client's specific financial situation, needs, and objectives. For life insurance and annuities in Georgia, producers must make reasonable efforts to obtain relevant customer information, like age, financial resources, investment experience, and risk tolerance, and then only recommend products that are suitable based on that information. This protects consumers from being sold products that are too complex, too risky, or simply not aligned with their best interests. Question 23. An individual with a life insurance policy in Georgia decides to change the beneficiary designation. What is generally required for this change to be effective? A. Verbal notification to the insurer. B. A written request to the insurer, typically signed by the policy owner. C. A court order confirming the change. D. Notarized consent from the current beneficiary. Answer: B. A written request to the insurer, typically signed by the policy owner. To effectively change a beneficiary on a life insurance policy, most insurers and state laws, including Georgia's, require a written request signed by the policy owner. This ensures that the change is intentional, properly documented, and less prone to disputes later on. While some insurers may have their own forms, the key is the written instruction from the policy owner to process the change. Question 24. What is the primary purpose of the Georgia Commissioner of Insurance's regulatory authority? A. To generate revenue for the state through taxes on insurance companies. B. To protect the insurance buying public and ensure the solvency of insurers. C. To represent the interests of insurance companies in legislative matters. D. To provide legal advice to consumers regarding insurance claims. Answer: B. To protect the insurance buying public and ensure the solvency of insurers. The fundamental role of the Georgia Commissioner of Insurance, and state insurance departments in general, is consumer protection. This includes licensing and regulating insurance companies and producers, enforcing insurance laws, investigating consumer complaints, and ensuring that insurers remain financially solvent so they can pay claims. While revenue generation occurs through taxes and fees, the core mission is safeguarding the public's interests in insurance transactions. Question 25. A life insurance policy in Georgia contains a misstatement of age or sex provision. If it is discovered after the insured's death that their age was understated on the application, what will the insurer typically do? A. Deny the claim entirely. B. Pay the death benefit that the premium paid would have purchased at the correct age or sex. C. Refund the premiums paid, without interest. D. Pay the full death benefit, as the policy is past the contestability period. Answer: B. Pay the death benefit that the premium paid would have purchased at the correct age or sex. The misstatement of age or sex provision is a standard clause in life insurance policies that allows the insurer to adjust the death benefit rather than deny the claim if the insured's age or sex was incorrectly stated on the application. If the insured's age was understated, meaning they paid a lower premium than they should have, the insurer will pay the amount of insurance that the premium actually paid would have purchased at the correct age. This is distinct from the incontestability clause, as a misstatement of age is not typically considered a contestable issue but rather an adjustment mechanism.